under its $1 billion multi-currency medium-term note program. The notes carry a fixed interest rate of 3.295% annually. Net proceeds will be used for refinancing purposes. Now, a robot designed to increase labor productivity, enhance work safety, and reduce the environmental impact in the marine and shipping industry. That's what Singapore's Hitech Jiatong has promised to deliver through its $3.6 million joint venture with the American firm Chariot Robotics.
It now takes up to 20 workers to remove the paint on ship hulls. And Hitech thinks it has a more productive way through its patented EnviroBots, which can do the job nearly 10 times faster. Besides enhancing worker safety in shipyards, there are other benefits as well.
It's an environmental option, it's a green option, and at the same time, it's just as productive, if not faster, cleaner and safer.
Hitech's American partner, Chariot Robotics, which is giving training on how to operate the robot, says it has big plans to expand beyond Singapore.
We know that Singapore is a vast market and a growing market, and so we're going to start here, but we have plans for the future of going in other places in the Far East and perhaps even in the Middle East.
For now, Chariot Robotics says it will concentrate on Hitech's 4 robotic systems in Singapore. Another 4 systems are expected by year-end.
Small and medium-sized enterprises can count on a new pilot training program to move up the innovation ladder. The program
assessment based on various industry checks suggests that there will be 50% drill ships and 50% semi-submersibles, which should provide a similar opportunity for both the Koreans and the Singaporeans to take a similar size in terms of order book.
Meantime, the improvement in the market environment for the offshore and marine sector is benefiting not only the big players, but also the smaller ones. Recently listed Hitech Jiatong, for example, says that sales is booming. The company is a specialist in fabricating and installing pipes for oil production vessels.
These pipes are generally very large in nature, very thick wall. They're normally made of either carbon steel or stainless steel or super duplex steel. And we actually run miles and miles of these pipes up and down the process system of different ships and vessels.
Hitech says that profit rose 30% to 18 million Sing dollars last year. Meantime, analysts are even more confident about the growth prospects of the offshore and marine sector going into next year.
But we would expect to see a rebound, a much more bigger rebound, possibly by second half of 2010, when oil remains at a much more bullish trend and people are a lot more comfortable getting the necessary financing, which remains to be one of the biggest blocks for building new rigs at this point of time.
Most brokerages and investment houses now have an overweight rating on the Singapore marine and offshore sector, as valuations remain attractive and the industry's fundamentals are continuing to improve.
And coming up after the break are its growth strategies. Money Mind's Frederick Lim has a story.
Singapore-based Hitech Jiatong fabricates piping systems and heat exchangers for ships and oil production vessels. 54% of its revenue comes from piping work.
These pipes are generally very large in nature, very thick wall. They're normally made of either carbon steel or stainless steel or super duplex steel. And we actually run miles and miles of these pipes up and down the process system of different ships and vessels, especially in the case of a FPSO, which is a floating production storage and offloading vessel.
Another 46% of its sales comes from the installation and repair of heat exchangers.
Heat exchangers are used, for example, to cool lube oil, to cool the main engine, the air that the turbochargers use for the main engines, or even to condensate to create fresh water in the case of freshwater generators on board of a ship. Normally each ship will have about 7 or 8 different heat exchangers which come to us for servicing, and then we service them. In the case of units that cannot be repaired or cannot be properly serviced, or units that cannot meet the operational efficiency, we would of course then refabricate them.
Both types of services involve specialized skills, and HeTech has seen a doubling of revenue and profits over the last 3 years. And with growing demand for its services, the company undertook a listing to fund its expansion. It sold 18.5 million new shares at 27.5 Singapore cents and managed to raise 3.7 million Sing dollars. Now it's looking to put the money to work through several new initiatives. One involves setting up base in Dubai as a springboard into the region.
We will use the proceeds to grow into the Middle East for our expansion. We have very heavy client demand there. As of now, in fact, we've been flying our men over to Dubai every so often just to cater to our customers' demand and needs.
Another initiative involves offering its services to chemical plants.
We are looking to go to penetrate into the land-based heat exchangers, which is basically for the chemical process industries, which we haven't actually looked.
Meantime, HeTech has also moved into a new business segment. It's formed a joint venture with 2 partners to provide services for the removal of corrosion and heavy-duty coatings on the decks and hulls of ships. The stock has yet to attract any analyst coverage.
And that's it for this edition.